What is up, guys? Welcome to a brand new video. Today we're gonna be speaking about how to manage your trades, how to take partials. When to take partials, when to go break even, when to move your stop loss, and all that good stuff. We're also gonna be speaking about how much you should risk per trade. Actually, no, we're not gonna speak about that. We spoke about the risk management stuff in the risk management episode. Hope you guys check that out. So essentially, let's say for example, I'm looking for a continuation sell. Very cheap setup right here. I'm taking a big zone, just for the purpose of this video. Let's say, for example, I'm taking a sell right here. I'm targeting these 15-minute lows, 1 to 20, whatever, right? Or I could even go to the extreme right here and then get tapped in with this one. So essentially, when do you go break even, right? So let's go to the 3-minute to make it easier. Essentially, you go break even once a specific low breaks, and for example, this would be this low. And when you have a continuation sell, you're looking to continue the sell, right? So you could easily see a retracement towards here. Or let's say, we took a sell right there, so it broke this low. It should not come back, right? So, for example, you got this here as well. You break these lows, right? So price would only respect this POI. Now, this was called your new, so this is normal, but in any normal specific area or any normal specific event, except news, so just normal trading, price will just respect this zone. So what will price do? Let me take a brush. So price will go here, they will respect it and come down. So you could also trade your stop loss above these highs to just reduce your risk, because once price goes above, it will keep going most likely. And this is how to manage your positions. Of course, this is risky because you can make a run up, which is going to be profitable, turn into a small win, but that's also how to manage your risk, because instead of that, you also could have hit your stop loss or your break even, right? So that is very, very important. So essentially, what you're going to be looking for is whenever you want to take a stop loss is actually where your trade will get invalidated, and that's above this high, because above this highest price will go most likely go upwards, right? And then whenever price break structure to the downside, when you have continuation bias, you're looking to sell once again from here. And if price does not respect your POI, then you're most likely getting disrespected, and price is gonna keep going up, right? So that's how to identify when to go break even. I most likely go break even whenever 3-minute break of structure happens, and I trail my stop loss, towards the high of the 3-minute POI. I always leave a bit of a gap, like 2 to 3 pips, to make sure I don't get stop hunted on the high. But you could also just stick to break even. Of course, you want to be a little bit below break even, because you want to keep in mind the spreads and all that stuff, so you don't want to even lose money on spreads or commissions as well. Gotta keep an eye on that as well. And then for taking profits, I mostly look at 15-minute lows. So you could have taken a profit right here. Could have been your take profit. Could also take profit right here. But if you're looking for 1-minute continuation sells or buys, you're most likely going to be looking at this area, because you're a scalper, right? You want to be in and out quick. This took about 10 hours. Well, instead this took about 4 hours, right? So that's the difference. Even if you got an entry here, this took about 2 minutes. Yeah, that took about 2 minutes. So yeah, there's also a big difference. So essentially, your take profit areas are just areas of liquidity. If you check the liquidity video, then you know what I'm talking about. Just liquidity like this, the lows where stop losses are. I'm targeting these lows. I don't want to go for crazy low, so I would probably be targeting this low and not this low, just because you always want to make sure that whenever price is, whenever you're catching a sell or a buy, you want to make sure that there's a demand zone or a supply zone. You want to be making sure that you don't get, like, price could have easily bounced off here, right? So you could have taken TP here, but let's say price comes here, it doesn't take a profit and goes back up to your original entry. That means that you lost, like, let's say the 1 to 5 R, just because your take profit was incorrect. So your take profit should always be areas of liquidity, but you don't want to be too greedy. You want to be realistic, meaning that I would have taken profit here. You also want to draw your liquidity, and the most recent liquidity is the most that matters. So as you guys can see, this was hella liquidity. It got taken in one candle. Then you had that continuation, and then boom, take profit. Of course, price could get run further, but also price could just add back to your entry, and then you would have lost all your profits for no reason, right? So that's how you manage your trades. Simple, take profit at liquidity areas at just where price should bounce, right? Wherever price should bounce, you want to take profits at. And then stop loss should be where your level get invalidated. That's what we already know. And partials could be taken, at this liquidity area, you could have taken partials. At this one, you could always leave a runner, 25% or 10%, just to see how much risk reward that would have been, to get the data and the statistics for yourself. That could also work. And then for going break even, as I said, a 3-minute break of structure would be nice. You always want to keep your stop loss above if you're looking for a continuation, right? If you're not looking for a continuation, and if your entry model is different, then you want to go break even. And it also depends on your scenario, right? You go break even in different specific areas. That's you're gonna adjust your trading plan based off that. I know it's a short video, but this is just simply and plain explaining what this is. You don't want to be forcing, or you don't want to be over complicating your stuff. You just want to keep it simple, plain. Take profit at liquidity, stop loss at the swing high, or invalidation level. Go break even once in 3 minutes. Break of structure happens. Take partial at another 15-minute, or mostly a 15-minute swing low, which is this one or this one, and or demand zones could also work. So yeah. Hope you enjoyed this short video. I know it was short, but yeah, that's just plain and basic what it is. Thanks for watching. Peace.